Typically, if you are interested in Bitcoin, it's for two reasons. One is that you want to convert your dollars to Bitcoin so that you can buy products and services with it, because there's no administrator involved in the transaction, like a bank or a credit card or a PayPal or a Zelle type entity. That's why it's called a decentralized currency, because only two sides of the transaction can see it. But unlike a currency-backed transaction, like a US dollar transaction, Bitcoin transactions, or any cryptocurrency transaction for that matter, do not come with legal protections that back it up. And they're typically not reversible, which makes them susceptible to scams. And if or when you want to convert your Bitcoin back to US dollars, you have to report capital gains or losses on it, just like any other asset. The fact of the matter is, as they say, cash, the US dollar specifically, is still king out there in the world of transactions. Currently, the US dollar is involved in almost 60% of all of the world's transactions in commerce, in business, and in trading. And that's in competition with the next most used currency, the euro, which is at about 13%. And in third place is the Japanese yen at about 5%. All the other currencies in the world, the Swiss franc, Chinese yuan, you name it, including Bitcoin, little tiny slivers of the transactions in this world. That's why people invest with US dollars, which brings me to the other reason people are interested in Bitcoin. It is an asset that moves up and down in price, and that movement can be an opportunity to increase the value of your Bitcoin. The dilemma for Bitcoin investors in this respect, however, is that you're limited only to profiting from buying Bitcoin low and selling high, and then converting your Bitcoin back to US dollars to realize any profit. There is a better alternative to invest in Bitcoin. And so for people looking to profit from Bitcoin price movement, consider trading the price movement in Bitcoin that you see every day, yet never having to actually be in Bitcoin, rather a derivative of it. An asset that moves in sync with Bitcoin, is valued and traded in US dollars, and is listed on the largest financial derivatives exchange in the world. The exchange I'm talking about is the CME Group, and the asset, there are actually two assets, the Bitcoin futures contract and the micro Bitcoin futures contract. These two assets trade on a regulated exchange. All participants see the same prices and quotes, and you enjoy the price discovery of a transparent futures contract. You can also trade on the long and short side of the market. The Bitcoin futures contract is valued at 5 Bitcoin. So at roughly 58,000 where it's trading now, you're talking about almost a $300,000 value contract. The micro Bitcoin is 1/50th the size of Bitcoin. So we're talking about something valued at about 1,200. So you can see on either end of the risk spectrum, you have two completely different leveraged contracts. Both of these contracts, like all futures contracts, are required to be traded on margin, which means a fraction of the value of the contract is required to be set aside in your account to trade the asset. For the Bitcoin futures contract, it's 30% of the overall value of that $300,000. For the micro Bitcoin, it's almost par, meaning you have to have about $1,200 in margin to trade a contract that is 1/50th the size of a Bitcoin contract. Again, fully liquid, marked to the market every day, meaning at the end of the day, the asset has a settlement price, and that is settled to your account and giving your account the actual value of the assets that you hold. If you're a trader in stocks, mutual funds, real estate, other commodity futures contracts like precious metals like gold and silver, energies like crude oil, grains, etc., and you're looking to diversify your assets into digital currency and Bitcoin specifically, look into Bitcoin futures and trade with assurance in that asset. And for more information, find a futures broker, give them a call, and get more information about it.